For those projects which perhaps aren't so liquid, so when we're going to really small scale, micro loan organisations, or where it's infrastructure investments where you can't access the capital, does that part just need to be left to private equity, venture capital, those kind of funds which are locked up where you can't get your money quickly? Or is there ever can you ever see, as EQ investors, there being a part to play for those long-term capital funds where they're not liquid, so you can't give the investors money back? Is that ever going to be a part of what you do, or really are you focused on liquid main markets?
That's a great question. So, just on microfinance, you can support a bit that through some of the financial institutions, and you provide them capital, bonds, and so on, and they can support microfinance on the ground. Obviously, if you want to be even more targeted, private equity, as you mentioned, could be an area. But liquidity is going to be the challenge. Mr. and Mrs. Smith, they might not need the money tomorrow, but they want to be reassured that they can. So I think we'll have to think about with the regulator whether we can develop different structure whereby people can have part of the investments that can be a lockup for a bit longer, but then some liquidity still provided as and when needed. We're not there yet, but this is something the industry is working on. I don't think this will be for everyone, but for those that can potentially afford maybe having some of the assets not accessible straight away, I think there's definitely something the industry is exploring.
Brilliant. Great. Damien, thank you very much for your time.
Thank you, Matt.